Sanjeev Prasad joins us now. He's MD and co-head Kotak Institutional Equities. Sanjeev, very good morning to you, and thank you so much for your time. Let's start with your perspective of what the first quarter has looked like in terms of results. Largely disappointing, you would say, or better than expected?
I would say it's line with expectations, but the expectations are pretty muted going into the quarter. So, thing not to get too depressed or too excited about. If you look at the Nifty 50 companies that reported, almost all the companies reported, 3 are yet to report. Profits are slightly higher versus our expectations, about 3% higher. But most of that beat, in fact, the entire beat is coming from one company alone, which is SBI. And that too on the back of non-interest income, post on the investment book over there. Otherwise, given the downturn that we are seeing in both consumption demand and investment side, numbers expected to be weak. So no real negative surprise in that sense. Many companies have already reported the quarterly volume numbers, which were not expected to be great. Many companies already reported the pre-release, some indications on the volume growth or top line growth or loan growth, etc. So in that sense, it's okay. The bigger question is, where do we go from here? Because this trend of disappointment in terms of weakness in the economy has been continuing for the last several quarters now.
Sanjeev, hi, morning. I'm just wondering, so Q1, as you said, along expected lines in quite a few weak numbers, there may be a couple of bright spots, but do you see any early signs heading into Q2 that perhaps things might improve in certain pockets? And here I'm specifically talking about recent reports on inventory buildup in the consumer space. I'm talking about staples more than anything else, not durables. Would you say that there might be some green shoots, particularly rural side?
Every quarter we keep on hoping for some green shoots or other, but honestly, we don't know yet. When you look at the numbers, whatever high frequency numbers that come out, they don't seem to be looking very good, I would say. Look at what has happened to GST numbers, look at passenger vehicle numbers, two-wheeler numbers, etc. No real signs of that, between a interest rate cuts announced by the RBI, tax rate cuts announced earlier, and lower food inflation. Hopefully, we'll start seeing some signs of pickup somewhere, but I don't know. See, keep in mind the fact that lower food prices, it could be a slight positive for the urban poor, which has been reeling under fairly high inflation for the last few years, and of course, very low income growth. But it's also negative for the agri part of the rural economy, right? Because the big decline in vegetable prices, which is driving down over inflation, is a negative for the farmers who are producing vegetables. So in a way, it's transfer of money, from one pocket to another pocket. Ultimately, the bigger issue in the economy is it's not simply creating enough number of good quality jobs for the middle segment, I would say, in the manufacturing segment. So you're creating some jobs at the top end, not many jobs at the medium end, and a lot of jobs are ultimately in agriculture or the economy, which does not really pay that well.
Sanjeev, good morning, Neeraj here. So just wondering, does that and potential for a slower domestic growth, plus all that's happening on the global geopolitical front currently, it may get resolved, but for now, the way it is right now, does it lead you to not only keep a lid on your earnings estimates, but lower your multiple estimates as well for India?
See, multiple estimates will more depend on what happens in the medium term also. So you just can't look at 1 year or 2 years earning numbers and take a call on the multiples of a stock or for that matter the market as a whole or the country. But yeah, if this trend continues, then somewhere people will have to reconcile that to the fact that growth rates are going to be lower, given the fact that India is simply not getting enough number of good quality jobs, so that all that hope around the demographic dividend leading to higher per capita income and in turn leading to higher consumption, that need to be reviewed. So there are some longer term issues which I think the market may need to be cognizant of at some point in time. Ultimately, given the fact that you are seeing a lot of technological progress globally, given AI, what does it mean for job creation in IT services sector in India, for example, or for that matter, GCC, which have been big drivers of economic growth in the past and hopefully the expectation it will continue in the future also. robotics coming in a bigger way. What does it mean for manufacturing? So the hope that India will create a lot of manufacturing jobs may get, alive again. So those are the medium-term challenges, which will also determine what happens to, market valuations. At this point in time, all I can say is that if you look at the current growth trajectory for many sectors, especially I would say the most of the consumption bucket, as also IT services, in the context of the kind of growth that they're delivering and the medium-term challenges on growth linked to either job creation in the economy, which will lead to consumption growth picking up in the medium term and driving consumption, or the challenges in the IT services coming from AI disruption and so on and so forth. I suspect the multiples of these sectors need to correct a lot more. So I suppose you will see a period of decent time correction in both these sectors. Market caps are not going
So
anywhere for these sectors.
Sanjeev, just to understand then, where are the opportunities, or is it all trending downwards? I think part of your note also talks about how the downward trend is also slowing down as far as earnings are concerned. So are you seeing, this trend reaching its bottom? Are you seeing optimism in any sectors at all?
The optimism is largely confined to the high-income households, I would say. So sectors which or companies we deal with high-income household consumption, that has held okay. But given the slowdown in IT hiring, in fact, firing now from whatever we are reading on let's say TCS being an example, and slowdown in hiring in GCs is also, even that could start slowing down. If you look at the bright spots in the economy, what were the bright spots, let's say, in the between, let's say, post-pandemic to a year back? That was basically high-income household consumption, government investment, and real estate cycle. Unfortunately, all these three are slowing down. And at the same time, the laggard, which were low-income household consumption, which is, let's say, staples, etc., still not showing any decent signs of pickup. And private sector CapEx still not showing any signs of pickup. On top of that, you add the challenges on the export front, what was going on, the geopolitical and tariff issue, and all the stuff. I don't see any big trigger over here. Consumption is slowing down, looks like. Not high income consumption slowing down, low income consumption not uh, showing signs of pickup. Investment demand, looking weak. Uh, Exports challenged. So where is the optimism over here? So I think we'll just have to, get through this difficult time.
Traditionally, the triggers, beyond private, you would look at either fiscal policy to bolster growth, which it has done in the past through various spending, and monetary policy, right? So you've already seen front loading of rate cuts, and you will see liquidity measures come through September onwards. I'm just wondering if that will move the needle at all. Do you anticipate that the next leg of growth will have to be government spending led?
Well, let's see, given the fact that India is running already fairly high fiscal deficits, between the central government and state government, they say we will end at about 7.3%, 4.4 and 2.9. I mean, that's already a very, very high number. The scope to do, any major fiscal stimulus is also limited. The problem is, ultimately, we are not seeing any big investment by the private sector over here. Whatever investment done, a little bit in manufacturing sector, etc., but that's about it. So somewhere the animal spirits seem to be missing in the economy. And how do you derive that? The government is trying its best. It gave a big income tax cut in September 2019 after, unfortunately, COVID happened. And ever since, we have seen more signs of really pick up in the private sector capex. So all the better, the intent behind the income tax cut was the company will start investing aggressively. We haven't seen that, as yet. PLI schemes, again, a lot of incentives given to companies. We have seen some investments in a few areas, which is a positive. Of course, we have seen import substitution in a big way. But that's not enough to move the needle. We need something more. I don't know what that something more is, but whatever is being done currently doesn't seem to be enough to excite the private sector. So that's the whole challenge. Unless you start seeing investment picking up in a bigger way, job creation coming through, how can you build a case for consumption picking up?
Sanjeev, so is it, and I'm not saying this in a bad way, but I'm asking, is it a cautious stance market-wide for you, and rightly so with all the reasons that you've given? Or do you believe there are some very strong green shoots? I mean, the targets given for energy transition still hold strong, still reiterated by companies, etc. Is that a green shoot? Is something else a green shoot? Anything that stands out for you as a green shoot in an otherwise very dull market?
There are pockets, where you can see some progress. For example, the entire manufacturing space. It will not be enough to create large number of jobs, but company-wise, seeing very strong growth, whether it is an Amber or Dixon, etc. These companies are ultimately, doing now backward integration, getting to start to manufacture components in India. On the back of that, hopefully more jobs will get created and so on and so forth. So some things are happening, not as things are not happening. For example, high income household consumption is still holding up well. People are still spending money on, on travel, tourism, transportation, airlines, etc. Still doing reasonably okay, I would say. But it just that in the broader context, it's simply not enough to move the broader economy. And what India needs is ultimately job creation for the mass segment.